Yes, Benny.
All right, thank
Yes,
you.
Benny.
Also, can you see
Yes,
my
Benny.
chart? Can you see my chart?
Yes, and ready
Yes,
can.
yes.
All right. Okay, so let's start the session. Give me a second. Let me see anybody in the room. Not yet invited. Okay, two more. Okay, so let's start with the DXY as usual. Okay, DXY, it has made another step up after last night's CPI. All right. So now I saw some of you talk about the CPI and how does it affect. But end of the day, right, whether CPI, the reading beat the expectations or not, all we actually need to know is how is that going to affect the interest rate and therefore of course the dollar, right? So and sometimes if you feel that example Jack says is like very deep. Now to make it simple and easy to understand, all you need to do is just do some reading if you like to, right? And have a sense of, is there any inflationary pressure on the US economy? If there is, now put aside the CPI, all this not, right? Whether it's a beat expectation or not. Now CPI come out, so you read the news, right? So what are the people say, right? Most of the professionals, what they talk about the CPI, right? And then they'll start to analyze for you. Now, if you read through a few articles and the understanding that or the message that you get from reading those report or after the fact, then CPI report come out and people start to comment. If you feel that, well, there's still inflationary pressure facing the US economy, means that there is a risk of inflation, right? Inflation never really go away, right? So if the inflation never go away, okay, does that justify for the Federal Reserve to cut interest rate in the future or to increase in the interest rate in the future, right? So you just start from this basis. I think it'll be easy to understand, right? So obviously there is a talk, right, after last FOMC meeting that in the Fed might start to cut interest rate in March, which is next month. Okay. And now the market is actually looking at last night's CPI reading to have a better feel of whether the Fed will really cut interest rate next month in March. All right. Now, how does it affect US dollar? Of course, if the Fed cut interest rate, you will affect the dollar. Dollar should go down, right? Interest rate go down, dollar should go down, right? But if the Fed don't cut interest rate because of the inflationary pressure still there, right? People are having job, unemployment data, the NFP, people are, the job is increasing, right? People are getting their pay rise. All this tells us that the economy in the US is good. Now, if the US economy is good, everybody have the job, right? Number of job fill vacancy, people claim for non-pay jobless pay, the kind of benefit is reduced, is less, means the economy is good, more people get a job, right? And with the CPI reading shows that there is an inflationary pressure still exists in the economy, which means that there is no reason the Federal Reserve will need to cut interest rate. Right. So now with the CPI come out last night, it means that the percentage of cutting interest rate in March have significantly reduced. And that's why we see the dollar jump up like this. All right, dollar jump up. Now, before even the CPI come out, right, I already mentioned on Monday, right, my expectation that US dollar is going to continue go higher. Now, whether is a coincidence or not, you can see that everything in all lines up, right? Dollar is going up here. That's almost for sure. It's going up there. Okay. So, I mean, so you don't have to make it until so complicated, right? If you feel that you're confused about CPI, the reading, whether it meets expectation or not, and how does it affect the currency market, you just think in terms of, is there an inflationary pressure in the market, in US market? How is the job market? Are there more people get claim job loss benefit, or more job get filled? All these are the, if you have interest in all this reading, you can read it up, right? Non-farm payroll every first Friday of the month. Read it, right? And you can have a sense of the economy in US. Now, if the economy in US is good, no reason for Federal Reserve to cut interest rate. Now, if Federal Reserve not going to cut interest rate, it is going to continue bullish for US dollar. That's it, full stop, right? And when the economy start to how do you call it? The inflation rate start to go down, and people start to claim jobless, company are not doing well. Now that is where the Federal Reserve need to cut interest rate to stimulate the economy. Right now, with all the bullishness in the US economy, there's no reason for Federal Reserve to cut interest rate in March. They rather save the cut of interest rate for future when they really need to cut interest rate. All right. So that means that we are bullish on US dollar, which our Monday forecast is correct. We are going to expect US dollar to continue to push higher, at least to the next target to fill this gap. All right. So with that said, all we want to do next is to sell all the major, right? We are going to sell the euro dollar. Okay. Euro dollar. We are going to sell the pound dollar. We are going to sell the Aussie dollar. All right. We are going to sell the New Zealand dollar. New Zealand dollar. Where's New Zealand dollar? Where is New Zealand dollar? Up here. Okay, we're going to sell New Zealand dollar. We are looking to buy the dollar CAD. See, look at dollar CAD, right? Up. We are going to buy the dollar Swiss. Where's dollar Swiss? Dollar Swiss. Look at dollar Swiss. Next target is very clear cut, right? So that's why I say that don't try to waste your time on those currency or pair that has not clear and less odds. You want to focus on currency that is so clear cut to you. We know, right, with CPI, everything, all the kind of jazz, dollar is going up. Now, if dollar go up, we look for something that is dollar strength. Look at dollar Swiss. It's perfect. It's perfect, almost the same as the US dollar, right? If we put side by side. You look at this. The left side is the dollar Swiss. The right side is the dollar index. It's coming here. Here. Right? Now, as I circle this area, you look to your left side, the dollar Swiss is exactly the same point, the same area. If I point at this area, you look at the DXY, it's pointing here, right? So if we think that your dollar is coming here, dollar Swiss is going there. So all you need to do is just look for your entry to go long on dollar Swiss. Focus on the pair that give you the higher odds. Doesn't mean that this is going to guarantee going to win, no. But the odds of this going up is very, very high, and we are going to focus on this pair. Forget about the pair that is not clear to us. Don't waste your time there, right? So that's one. Now the other one is the euro dollar, right? Or say we see this pound dollar. Now let's take a look at pound dollar. we are looking to sell. All right, we are looking to sell. And where is the target? This is the gap here, which is here. Right? We point here. This is an 13 November. 13 November here. Right? So you can expect target to come down all the way to here. Isn't it a lot of pips for you to harvest? Yes. All right. Take a look at the euro dollar. November, same this area, which is this. The price is already there. Can you see that? It's already here. Right? That's why I say last night I'm taking my profit because the price already reached and fill in the gap. Now, of course it can potentially go down further because if the US dollar DXY is still have room upwards, right? Which means that euro dollar should have more room down. Maybe here, this area. Next area target will be this low. All right. Then we had look at the Australian dollar. With Australian dollar, yes, we have a lot of room here down. Now, what is the Australian dollar doing? It's very clear. If you compare to euro dollar and Aussie dollar appear to us very clear, right? You can see that we have a very nice swing high. We have a very aggressive sell yesterday. And now what the price is doing, it is doing a retracement up in order to go down further, right? So this is a pair that you want to focus. You don't want to focus on the pair that is not clear to you. Why bother those pair that are not clear, right? So focus on Aussie dollar, right? So let's go with the other pair, New Zealand dollar, pound dollar. Okay, pound dollar. How about pound dollar? Now, does the pound dollar make sense to you right now? Now, compare with Aussie dollar. Let's type in Aussie dollar on the right now. Now, Aussie dollar, you can see that we have a very nice, like that, price pullback, right? We have this, right? Price like this, price down, price pullback, like go down. Now, how about this? Well, we don't have that. It's not that clear, right? We have already done it already give us the pip yesterday, last night. But right now, if we compare between pound dollar and Aussie dollar looks better than the pound dollar. Because you can see that we have a swing high, price pullback, down. But here on the pound dollar, we have this swing high as well. You can see this is a 2 candle, right? 1, 2, this 2 candle, close, right? So today, price already did pull back, right? You can make a high here. This is the high for the day, and it start going down. But Aussie is still pulling back up. Aussie is going up, while pound already go down, right? So if we look at the pound Australia, I bet that it's going down already. Let's take a look at pound Australia. Pound Australia. Hey, it didn't go up, go down. Pound already start going down, it doesn't go down. Pound Australia. Pound already start going down. Let me see. Yeah, we see pound dollar. Move our daily time frame. Right, pound dollar come down. Aussie dollar going up. Going down. Down, not going up. Pound dollar. Pound dollar should go up. Pound dollar should we expect pound to Aussie dollar to go up retracement, which means that during a retracement, this can go up, right? When Aussie dollar start coming down, then this pair should continue go higher, correct? Is that correct? Pound already went down. Aussie dollar is doing retrace, moving back up now, right? Or go down, it's pulling back up. So this is showing this candle. Display on this candle now. Pound Aussie is going down on this candle, current candle, and that's why we see the Aussie dollar is going up. Aussie dollar, this candle, Aussie dollar is going up, so pound dollar is going down. All right. So just like Euro Aussie. Okay. How Aussie we have now Aussie dollar is doing retracement up. So you can see that this is coming down. That's why this one is coming down. But I don't think it's going down. I don't think so. It's just follow the strength of the relative strength of the Australia right now. I think based on the daily time frame, I don't see any swing high form. Do you see any swing high form yet? Do you see any DHL yet? No, don't have. Right? Which means that I don't expect this pair to go down yet. We might see price come down and then make another turn up, then give a DHL and then come down, right? Because I don't see any turning point right now on this Euro Australia, right? We have a swing high, we have a swing low here, right? We have a swing low. We have a swing low here as well. We have a swing high. We don't have a swing high. Can you see that? We have this swing low. We also have this swing low, right? Now, do we have any swing high based on the three swing high DHL that we have? We don't have. So we can't say that this is going down. It might even want to go back up again, right? To do some stock hunt before we go down. That's why I say it's not ready to go down yet. This is not ready to go down yet because we have a swing low form. This is a big bullish candle. So this could be just a pullback retracement to fill this gap, then continue run up. Right? So not ready to sell yet. If you are doing scalping, it's okay. But if you sell and expect the price to come down all the way to take this low or take this low or take this low, I think it's not yet ready. Okay. And if you take a look at this weekly candle, you see what happened to this pair? We have this is going up, yeah. After this week, you can see the price basically not doing anything. So this is sideways. This pair is sideways, it's not moving, right? So it's not moving, no opportunity. So that's why I say it's not ready to move down yet, right? We need to move, otherwise there's no opportunity to make money. Okay, so let's compare the major, right? So if this pair is not so clear, why we want to keep focusing on this pair, wasting our time? We rather spend time on those pair that is very clear for us, right? We are going to sell the major. Now, are we going to sell this? Are we going to sell the euro pound? Euro dollar. Now you look at euro dollar. It has already reached this gap, right? Look at this. We have formed a swing high that took out this short-term low and make a lower low, right? So we have a short-term low taken out, make a lower low. The price is right now over here. Is this a good area for us to sell? Is this a good area for us to look for a sell?
No.
No.
No, exactly. It's not a good area, right? So we know we want to sell the major, but euro dollar is not a good area to sell because we are right at the bottom. We are below the swing low. It's not a good pair right now. Last night it is because last night the price was here, right? So it was something like this last night. This low here, the high here, and we are like this. Last night it was like this, right? So we sell here. Now this is done, right? So we move on to another pair, pound dollar. Now pound dollar. If we take a look at this, now has the price reached the area that the gap? No, the gap is right here. There are plenty of room down, right? But is the structure of pound dollar good for a sell? Now, if this is today's candle, now you don't look at today's candle. Last night it closed like this, which means that today is a good sell, right? Today we're going to expect the price to open, trade up and down because today we expect another down candle to target this low, right? Because last night we have this DHL, we have this immediate bearish close, right? So that is one of the swing high that I teach, right? So this next today candle, we expect another bearish candle. So in a bearish candle, we are going to expect price open here after the closing price. It open here. We expect the price to make a high for the day and then go down, make the low of the day, and then eventually close. And you see what happened to the price. It has opened here, right? It's open here. And what did the price did? It went up, make the high of the day, which is here, and expand down, targeting this low. So this is an easy trade for pound dollar. Euro is done, but pound dollar is an easy trade for day, right? So now, how can we anticipate that this high of the day is going to form here? We look at previous candle. Is there a gap within the previous candle? We have previous candle this is Tuesday. Yeah, Tuesday, Wednesday. So it's all this candle, right? This is Monday. So we're not Monday until Tuesday. Monday, Tuesday. Tuesday start from this candle. So all this 1, 2, 3, 4, 5, 6. This 6 candle make up the yesterday candle. Now, is there any gap? Here. The gap is here. So from this candle low to this candle high, that is the gap. That's where we expect today high is going to form, and which it did form there, and the price dropped. Can you see now? Simple, easy trade, right? So don't waste time on those difficult trade. This is easy trade, right? So now you expect you should able to get in here if you are trading this pair. Now what time is it? This happened on what time? This is UTC. Sorry, let's change to New York. New York. Yeah. This should be London market. Yeah, Frankfurt market open. Can you see that? Frankfurt market open. All right. So now remember I talked about that, right? Before, if the market want to go lower, what must he do first? He has to open. Where is the open? Midnight open 00 hours. So this is a candle where it open price. This one 00, like this is a 00 hour. New York 00 midnight, right? Opening price. So the opening hour is here. Here, this is opening hour midnight, right? So you see what happened to the price. This is 1 hour, right? So let's go to 15 minutes time frame. You see what happened to the price. This is a midnight opening price, right? Price open. What did the price? It went up. It went up higher first, right? For today, and then down. Because the bias for today is down, so it has to go up first, right? To get some stop run here, get the order, get filled, then drop. Okay. So that is London session. London session from Frankfurt or European session, right? From 2 to 5. So this is 1, 2, 2. Yes. 2 to 5. Okay. So that is London session. So now we are going into the New York sessions. We're going to New York sessions, right? And we know for pound dollar, where is our target? The target is here. Has we reached the target yet? Not yet, right? This should be the low, right? Of course, we have a further target down, which is the gap, but that's very far away, right? We don't expect today the price to go there. So we're going to target the immediate target, which is this string low, right? So has the price reached the target yet? Not yet, right? Which means today we have a London session that actually went up when opening price and then it sell down, right? And now we are going to the New York session. New York session is doing retracement to do what? To continue. To continue, right? Continue to where? Continue looking for this target. So now we can use the New York sessions to wait for a pullback and drop. Right, so that is your trade, right? Also we have to consider is today, has the price moved a lot already? This is London, right? This is, okay. This is 5 o'clock. It's here. Has pound dollar moved a lot? What do you think? Has it moved a lot already?
Yes.
Yes. So if the pound dollar has already moved a lot during the London sessions, New York sessions, we don't expect New York session to move another similar manner. Very unlikely because most of the petrol or the fuel has already utilized during London session. That means that we might not see the price come here for tonight, right? And which means this pullback, we can take a short and then targeting this low and treat this as a session trade. Session trade. Session, go by session. New York trade. Sell, target here. Why? Because we don't expect this price to continue to go lower because after price moves so much, it cannot. Both sessions are moving crazy. No, right? So London already moved. New York, we don't expect it to move a lot, but we can expect this price to continue because this could be a continuation to downward, right? So we can wait for price pullback and continue sell and targeting here. But this New York session, you don't expect a lot of movement already because the movement is already done during the London session, right? But this could happen is tomorrow when the price open, the new day happen, we might see the price like this. New day open, the price might go up again like this and down again, go for this target. All right. So pound dollar is a pair that you want to consider. Now the other one is the Aussie pound, Aussie dollar. Now Aussie dollar, as I show you, is very nice, right? The pattern is so easy to recognizable, right? The price is here. We have a high that took out this short-term low and make a lower low. Okay, so we have something like this. Where's the price right now? It's here. So we can expect the price to retrace and continue. So this is another pair that we want to pay attention to sell again, right? Why you want to sell? Because our expectation for DXY is to continue to go higher until you feel, right? So there's plenty of room. So we are going to sell the major. Now we are trying to filter out which major give us the better odds, right? So we pick so far Australian dollar and the pound dollar. Let's take a look at the New Zealand dollar. Okay, New Zealand dollar. What do you think, New Zealand dollar? Is it good? Look at this. Well, I think it's good. We have this high. Right. We have this high. Take out this low. Make a potential low, lower low. So this is a pullback to go lower. Right. So New Zealand dollar also can be a potential to look for sell. Right. And we look at dollar CAD. Dollar CAD, we are looking for long. Okay. Now, the upside target is this high. Look at what happened to dollar CAD, right? We have this. A low, take out this high, make a higher high, right? So we have something like this. The price is here. This is bullish, right? So we can expect the price to make a low here and continue to go higher. Okay, make a low and continue to go higher. This is Tuesday. So this is daily. Wednesday, Tuesday, Monday. Okay, so now we basically wait for price to form a low or turning point, swing low, and then go up higher. Right. So this could also have potential trade. Right. This one I like because it has closed above the swing high. Very convincingly, and it closed above. Right. So this is just a pullback and go back up again. Right. This is just a pullback, go back up again. Right. So I would like to look for a potential long here. I would like to see whether we get maybe a DHL, right, or a swing low form here and continue to go higher. Now, if I don't see that, then I will not take a trade. But if I see that DHL or swing low, I'd like to take a trade go on, right? Targeting the double top here. So that is the target. Okay, so this is another pair to watch. Now, dollar Swiss. I like dollar Swiss. I think I posted before they even move, right? I think they still have more upside, right? So we have taken out this swing high. It closed. It not only it take out, it closed convincingly above, right? So this tells me that it want to go higher. So all I need to do is just go down to a H4 and wait for price to pull back. Now where can it pull back to? Here. This gap. Right? So I'll be waiting for price to come up here and buy. Now look at this, I draw here. right? Last night before the CPI, you go down to 1 hour, you can see. This is exactly where I expect the price to drop lower and reverse. Look at this, right? That is, basically what I did was I just pull a fib before this happened, before the CPI news, right? Before the CPI news happened, I saw this on dollar Swiss. And I have a bias that it has to go higher, right? The target is above the current price. And I saw that we have a swing low, we have a swing high, right? So what I did was I pulled the fib from this low to this high. This is Fibonacci retracement 61.8, right? This is 79%, 88%. So I was expecting the price to drop into this level, the blue zone area, for long. And when the CPI news came out, yeah, this one, right? Go straight there and go up. Now with CPI news like this, there's no way you can wait for news come out and chase after it. You must already place your order there and just take your risk if you want to trade that way, right? Because the reason why I'm so convincing, because when I look at this pair, I can see that it is very clear to me that you want to go higher following the DXY. So that is kind of situation that you can take some risk if you like to, right? And the price just went up, right? So now where's the opportunity? Our opportunity right now is just wait for a pullback, right, into this gap and then go long again. All right, that's for dollar Swiss. Okay. So I think I basically cover all the major. So it should be an easy trade, right? So that's how also, because you are not going to trade every single pair, right? Once you understand the dollar is going up, now we know that we are going to sell all the major, right? Where you have a US dollar on the second currency, except the dollar CAD and dollar Swiss, right? Which is the US dollar on the first currency. Right, and then we have a very clear cut, clear direction what we're going to do with all these currency. Dollar yen, you can see that it already reached this target. This target I've been talking about this target since last week, right? When the price was here, right? It has already reached the target, so this pair is no more, right? We can just put it aside. It's gone. Okay. Any question?
No.
Another pair I mentioned this is dollar yen, right? It is going higher now. This is today's candle. Look at their bullishness, right? And last week, weekly candle. This is last week candle. Very bullish, right? It closed above the swing high. It traded above the swing high, and it convincingly closed above the swing high. Very, very bullish, right? So we can expect this week to continue to push because the momentum is there, right? It's either the price open, continue to go up, or open, retrace lower, and then go up, right? So we switch to daily time frame. This is Monday. Monday opened, it retraced down, right? We have this weekly candle. Let me highlight the weekly candle. Daily. Monday, right? Monday, this is Monday. It made a low here, right? And it left behind a gap. Before Tuesday, when Monday candle closed, it closed here, right? It left a gap. So we have 1, 2, 3, 3 gap. We do not know which one is going to retrace to, we just have to take every one of them, right? So Monday open, Monday close. Tuesday, we saw the price trade lower into the first gap. It trade below the Monday low, right? So I say that I think also many times. We already expect this week to be another bullish week. Another bullish week. Okay. So opening price, Monday, it make a low. Tuesday, it take out Monday low. And I say that, right? If this week is going to be another bullish week, the first half of the week, which is Monday and Tuesday, is likely to form the low of the week, especially on Tuesday. It is very high probability Tuesday is going to form the low of the week, which is here. Now, when Wednesday open, Wednesday might want to come down to take out Tuesday low. And if that happens, Wednesday will become the low of the week. So the low of the week in a bullish week is going to either happen on Tuesday or Wednesday. It's going to happen on Tuesday or Wednesday, 80% of the time. That is your probability already. So once we understand that the low of the week is going to happen either on Tuesday or today, right? And so today we see the price open. It make a low. If we go down to 1 hour time frame, that was Tuesday low. Today, you see what happened to the price? It went down, right? It make a low here. And immediately after that, it make a close higher. And that is a 1 hour swing low. Which means the price, after this make a swing low in the 1 hour, we see the price continue to go higher. Which means that the low for the day is likely to be this one. Which also means that Tuesday is likely to be the low of the week. This is going to be the low of the week. Right? Monday, Tuesday form the low of the week because we already see the price attempt to come down but get rejected. Now we are already in the New York session. It is very unlikely we see the price decide to come back down, right? Unless there's an event or news driven. So once we know that the low of the week is going to be on Tuesday, we can simply go in and just buy at the market and stop loss below here. Or you want to be a safer, maybe here, right? Because we know that 80% or 70 to 80% of the time, the low for the week is going to be here. The rest of the week, the price just has to expand upwards. And that's exactly after I post in afternoon about this New Zealand yen. I just went in to buy at the market. I put my stop loss below and I off the computer. I don't see anymore. I just put my stop loss here at this big candle, right? This was what time? 4 o'clock. Let's go to one. Yeah, here is 3 o'clock. Here, 3 o'clock. As this candle, you see here, in a 1 hour time frame, we have a low that take out this short-term high and make a higher high, a swing high. Then we see the price dip lower to fill this gap. That's where I enter my stop here. So I expect the price to continue to just run up. Now, can the price come down? Of course it can, but the probabilities tells me that the chances for the price to continue to expand up is higher than going down, because today is already Wednesday, tomorrow is Thursday and Friday. 2 more days. 2 more days, I think, is for the price to take out this high, right? And maybe even take out this high. Okay, for 2 more days for the price to move up, right? So if we go back to the weekly candle, Yes, last week bullish candle. This week, right? The opening price is here. This could be a retracement, a down candle, but I'm expecting the price to target last week high or even higher. Okay. Now I might be wrong, but I think that the odd is with me to go long. Can you guys follow what I say? So I'm using the knowledge of the candle formations, right? Monday, Tuesday, Wednesday, Thursday, and Friday to take this trade. I must have already a bias thinking the price is going higher, right? If the price is going higher, somewhere here, I don't know where, right? And this is last week bullish candle. This week, the price should come back down, retrace, and then go up, expand up, right? So as the price come down, you just want to buy and go up. Okay. They left a gap here, right? Now, I would prefer that this gap, the price don't come down to fill this gap. I prefer it to don't come down, and the market will just expand up and close bullish this week. Now, if the price leave a gap here and not fill this week, it just tells me that this market is very urgent to move higher. It's very bullish, basically. So I want this gap not to be filled. If the price decides to come down and fill this gap, well, it is still bullish, but it's not so ideal because it has time to come down to fill the gap. I prefer to see this week it leave a gap and it close bullish. And next week, I will continue to look for a bullishness because it left a gap. It just tells me that it is very bullish. And it's going to continue to go higher for next high. And then next high. Okay. Yeah. So that's why I think on the New Zealand yen. Any question? Okay, I leave to you guys. Anybody have look in any currency? I forget almost an hour already. Anybody looking any currency? Gold. Okay. Gold, I think the price it has already done. Now you are looking for gold. It's too late already. Done.
Benny, can we look at oil?
See?
Oil.
It's already come down to fill this gap. Now remember, I talked about this gold, I think quite a few weeks, right? I said the price is coming down. Target number 3. Do you still remember target 3? Darren, are you there? Inside here? He said Darren.
Yes.
Did I say target 3, this one? This not. Target 1, up, target 2, target 3. So the price already came down to reach for target 3. So it is already done. This is done, right? So now, what the gold might do next is we may see a price to start retrace up, right? You retrace up. If you pull your fib from this high to this low, you might retrace up to 50% or even higher, and then go down again, aim for this. Next target. Next downside target. All right. I think it will come here. I think gold will come here. So I can call this target number 4. But it will not just go straight down. I think it will just pull back and then go down again. Okay. That's why I think gold. About gold. Who asked for this? I go. Who is that? Philip, Melvin. So okay.
Yes, Benny.
Yeah. Okay. And also, you do not want to sell anymore. You know. Now, try to understand what I teach. Look at this. We have a swing high that took out this short-term swing low that make a potential lower low. So now we are having something like this. The price is here. You do not want to sell anymore, right? Because on this dealing range, we are right at the bottom. If you want to sell, it has to be above 50% of the dealing range. So now we can expect the price to go up and then down. All right. You can look for long if you like, right? But I think the price is actually likely to draw downwards to next low here. Okay, oil. Oil is going up for this high. Right? Remember when the price was here, I say it's going up, right? It's going up for this high. Okay. 4 hour time frame. Now, if we pull back, I think this down candle, which is act as a last accumulations, is likely to be to support the price, to push the price higher. All right. This one. This low. This low should not be taken, right? We can expect the price to retrace lower and then go up again for this high. I mentioned just now for this high. It should be still bullish, right? But if the oil retrace lower and lower than this low, then it's likely to go for this before go up again, right? So if the price trade lower than this, then very likely it's coming to this, then go up again. So you're looking at this dealing range, right? Short-term high taken, price goes up, back, go up. So right now it's not a good idea to go long anymore. You want to go long on oil? Not a
No, Benny, no, Benny. I already exited oil.
Yeah. Okay. Any more?
SP 500.
Sorry.
SP 500.
SE 500. You mean
SP.
SP 500? Index, is it?
Yes.
This one.
Yes.
Now, based on the daily time frame, now I'm not looking at the scalping. Yeah, if I trade on the lower time frame, this could be a downtrend, right? But if I'm looking at the higher time frame, oh, this is a down candle. Down candle. Right. So this is the last accumulations. The price have a DHL. It closed right below. Take out the candle low. And it also take out the last accumulations. It's going down. So this is just a pullback to go lower. The next level they are responding is this last accumulation, this last down candle, right? So price down, you respect this last down candle, and it pull back. I think this is pull back and continue to go lower. Okay. So if you are trading this, you just wait for price to pull back and give you a swing high or DHL and then go down. This is very bearish, right? A change of behavior from up. This is like collapse. It's like collapse, right? We took out this low, these accumulations. Yeah, these accumulations. So now we can use this accumulation for price to come back up here and sell. Here, this area you become your AOI. You can expect a reversal here and then sell. Okay, Nasdaq the same. Nasdaq. Look at this. We have a turning, we have a swing high form. Daily swing high. 1, 2, 3. Right? Candle 1, candle 2, candle 3. So this is a pullback, retrace. We go lower. It's going lower. Right? And this also confirm based on confirm with the fundamental, right? If the March, it can come to March next month, if Fed is not going to cut interest rate, right? Which market expect as early as March, Fed start to cut interest rate. If Fed is not going to cut interest rate, maintain if they maintain the interest same interest rate, or even if they increase the interest rate, that'd be crazy, right? Dollar will continue to break higher, and when a dollar bullish, we are going to see when dollar bullish, when dollar is up, when interest rate is up, right? This is bad for stock. Stock is coming down, right? For last few weeks, it is very, very difficult to trade the stock market because the dollar is up, right? The dollar is up and all the indexes are making new high. It doesn't make sense and no logic, right? So stock become very difficult to trade. But now we start to see the market start to turn around. Now this turnaround doesn't mean that the price is going down, right? If you look at the Nasdaq, the last down candle is here. This swing high simply say that the price is retracing. So we see the price now retrace up to come lower. It does not tell us that it become bearish. But for S&P, ES is a different story. ES is turn around, swing high. We took out this last down candle, which is accumulations. It closed below convincingly, right? So now we can say that ES on the daily time frame have changed from bullish to bearish. Going to start a new bearish trend. Nasdaq is likely to catch up later. Dow, the same thing, right? So I think only Nasdaq is holding the price. It should come down.
What about pound Swiss franc?
All right. Look at Dow also. Also a confirm, right? A swing high. It's going down. So we have the Dow going down. We have the S&P going down. Only Nasdaq is not going down. It's retracing, but not going down. Right? Because it still respect this down candle. So it is retracing. Right? Unless we see the price take out this last down, then we say Nasdaq is coming down. But so far, it looks like Nasdaq is only one out of the three is still bullish. Okay. What do you say just now? Sorry.
Pound Swiss franc.
Pound Swiss. See, we have this as a dealing range, this high to this low. Okay. Look at this. So we trace up, retrace. Right. So now we see what happened. Of course, this is a weekly time frame. Let's go to daily. What did the daily tell us? It closed above. Right. So this could be just a pullback. We'll continue go higher. Now you look at New Zealand, it's different. Daily, right? So someone asked me whether this trade is still valid. This high is not violated. This is the low, that short-term low that taken. Price retrace, going back down. It's targeting here. Okay. So of course, this one we don't have the swing high we want to see. Do we have? We don't have, right? The price just like a 2-bar reversal, right? So difficult to get in. Anyone get in this one? So you are trading this range, right? You are trading this alama, right? This one. You're trading this, right? So price a pullback, we go back low. For pound New Zealand, I mean pound New Zealand. Pound CAD also. I believe it's coming down. But all these are not as clear as the major, right? You can see that I draw this one here. Why that one? You go to daily time frame. It's a gap, right? So price went straight to the gap. This is the dealing range high, dealing range low, above 50%. We can expect a turnaround here. Okay, you see how price come down. So right now, this pair, right, I would like to sell only if we can take out this demand. Look at this demand here, demand zone. This one, right? You can see so far it respects this demand, right? So if the price can take out this demand zone, right, then we pull back, then I will sell, targeting this double bottom. Okay, but right now, as long as this demand is not taken out, this can just come back and then continue to go higher. Right, so this one need to be taken out first. This one is to up. Okay, looking for up. The target is up there. Okay. Maybe. Okay. If you take a look at the weekly time frame, last week, look at this. We have a very, very bullish candle. It has DHL the previous week low. And it closed very, very bullish above previous week high. This week, we trace all the way to this low and then going to expand upwards to where? To fill this gap. So this is an up. This is looking to buy, right? Go to daily time frame. Monday, Tuesday, Wednesday. So which means Tuesday low is likely to be the low for the week. We're going to see the price expand upwards. So what you can do is, if you have such a strong bias on that, right, you can actually put your, go to a maybe H4 time frame, your stop loss is here, right? And just buy in the market and targeting this gap. Or you can go to the H4. After this H4 DHL, we expect price to pull back, which it did already, right? It pulled back to fill this gap, and that's where your entry is. And we should expect the price to go up, this high, and then that high, right? So this is another trade that I think is easier than the pound Swiss. This is an easier trade to go long. Okay. So to look for long on New Zealand CAD, look to long on New Zealand Swiss, right? New Zealand Swiss, New Zealand yen, they are identical. See, it's going up already. I'm very confident that it will go up, at least to this area. At least, right? New Zealand yen, New Zealand Swiss already went up. It already make a higher high than this, right? Price went up, make a higher high. New Zealand yen, not yet. Right? Is it already? Not yet, right? Sorry, this is New Zealand Swiss. Where's New Zealand Swiss? New Zealand Swiss. New Zealand Swiss, it is a weekly time frame, sorry, daily. It should go for this target, right? Daily. New Zealand daily, right? This high, targeting this high. This high. All right, so this should be easy trade, these two. And buy these two, also buy New Zealand CAD. Sell the major, except the euro dollar. Buy dollar Swiss, buy dollar CAD. I think that's all. Okay. Yeah, that's all. I think also this is a pair that you might want to consider. Long the dollar, China renminbi. Right? China has been, central bank has been cutting interest rate due to the economy is in bad shape. Federal Reserve is either maintaining the interest rate or might even increase interest rate, right? So based on the FA, this can only go up, should not go down, right? So this pair, we can see that it has actually made a high, a low, right? So any kind of pullback to this area is just add-on position, right? This should go up. I'm waiting for renminbi to collapse. To collapse. I hope that you will collapse, that this pair will fly. And I think it will collapse. Based on what I read on the news, right? I think the economy is really bad shape. Okay, so I think that New Zealand renminbi should go up to here. Can you see that? My green line, that should be the target. This is target 1. Target 2. Right? So there are plenty of room upwards, right? It might take a while. It's not going to be a straight line, right? But I think the inevitable that this pair has to go up. Okay. I guess any more last question? All right, no more questions.
Thank you.
Yeah, bye. Thank you.
Thank you, Benny.
Yeah, bye.
Thank you.
Thank you, Benny.
Yeah, bye.